Good morning, traders. Today is Friday, December 30th, 8:02 a.m., 30 minutes before closing opening bell. We are at the morning of the final trading day of 2022. And the market makers, clever as they are giving us one final riddle. The week of January 3rd of 2022, this year, we made all-time highs, 479.98 that week. 80% of that is 383.98. You guys know that 20% threshold is the bull bear market threshold, right? So 383.98, technically, if you're just going by straight math, is the number of the bull bear market line. Okay? And we are currently sitting at almost 381, I think. I was just last looking at pre-markets. So let's get into whether we think the markets are going to try to go for that 383 number today or not. I suspect they are. They're going to try to go for it. But will they get there? We're going to find out. Let's have a look. Okay. Left-hand side, 4-hour chart. Yesterday, I actually second-guessed myself. If you recall, I said, I'm wondering if I was too aggressive in drawing this channel top. Turns out, maybe I wasn't. We're back in the channel. Okay? Yeah, I was thinking, well, maybe it's this line up here. Maybe it's that line up there. Nope, it's actually this line. We're back in the channel this morning. It retraced all of last night. It's still retracing right now. Okay? But I'm going to tell you a little secret what I think the market makers are doing. Okay? 1-hour chart. Okay, you know, more of the same. Now, let's skip back to the 4-hour chart for a second. Okay, it's flattening out under the zero line. Okay? So it's basically, I mean, it's nowhere near the bear territory. Bear territory is negative 35, right? You can't even see it in this view, the negative 35 line. This is the negative 20 line right here in the 1 hour, but it's nowhere near bear territory right now, okay? So, now, here's the 1-hour chart. Look at the 1-hour MACD. Remember last night's video, I said, well, it's either going to go up, kind of float, or just go down. We're going to see what happens here. It could still curl out at the zero line and then possibly go back up. Possibly. I'm not saying that it will, but it still could. And and you'll see in the next slide actually how that's possible. Okay, here's the 5-minute chart, futures. You know, last night, as you see, here's the retrace all of last night. See that? It still has yet to make a higher low kind of notch to stop the fall. See that? You still have yet to do it. So I just note that, oh, that's interesting. Here's a higher high, but that's a lower low. So the question is, this is the up. Here's the retracement. We're looking at what? Oh, just eyeballing it. 35 to 40% retracement, right? From top to bottom, just eyeballing it. Is this creating on the final day? Right here, is this going to create a megaphone pattern, right? Smaller top, bigger top, higher top. Today, higher top than that one. What do you guys think? Is it going for the megaphone pattern on the final day of trading? Okay, let's go over to the right-hand side. 5 minutes chart, 195-minute chart. It is tracking. I'm going to tell you the market maker's dirty little secret today. It is tracking to the 195-minute SMA 20. Well, it's tracking to the 195-minute time frame, but specifically, it's consolidating under support of the SMA 20 on the 195-minute time frame. See that? See that? Look how it kissed it perfectly. Touches it perfectly. Kissed it perfectly, touches it perfectly, okay? That's how you know. So Break out your 195-minute time frames, and guess where I think it's going to break this. It's going to succeed in breaking this line. It's going to overtake it. Ultimately, if the 195-minute time frame is the dominant time frame today, then that, my friends, that 383.16 is the EMA 50. 383. That's the ultimate goal. Now, as you saw earlier, my official calculation was 383.98 versus 383.16. Leave a comment what you guys think. If you want to be like that official about it, if you don't get back to 383.98, well then you are technically outside of the 20% because you're 20 point whatever 01 or 20.05 outside. Or are you just including the whole 20% as a round number, right? As a round number. So you could be between 20.01 and 20.99% and still be considered a bull market, right? Because you have to be greater than 20%. Or what is it? I don't know. I have to look what the official definition is. Is it if you are within 20%, meaning within 20.99, then that is still a bull market, right? By official definitions. But if you are 21 even and greater, that's a bear market. I'd have to, maybe you guys can leave a comment. I don't know the exact definition, right? Is it a round number or whatnot? Okay. Just 20% is 20% inclusive. Okay. So I think the markets are likely going to overtake this at opening bell. That's the bottom line. Remember I also said, remember I also said, and this includes yesterday too. 2 days ago I said, during the trading hours, on the 5-minute time frame, it must successfully backtest the 5-minute EMA. In this case, this is an example of failure. Up, failure on the backtest right here. Failure on the backtest. For it to succeed, it must go up, backtest, and bounce off of the EMA, and then go up. Okay? Let me show you on the next slide, actually. Good example. Yeah, okay, well, this is close enough. Okay, up, successful backtest, up, failed backtest. See that? Here's a successful backtest. 1 and 2, between 1 and 2, but after 0.3, that's a failure. Okay, I'm showing you this slide for a couple reasons, but back to the backtest idea. Remember 2 days ago I said, as of 2 days ago, we still do not have confirmation of a successful backtest during trading hours. I made that distinction. Yesterday, we technically did not have a confirmed backtest during trading hours. It was pumped by the markets in pre-markets. So technically, we have yet to have a confirmed backtest during trading hours. So I guess we're going to find out today, because as you saw in the previous slide, the market's already down. We're going to find out if they actually want it, to actually take it for the first time, officially during trading hours. I guess that's what I'm saying. Okay? Now, I'm showing you this slide. If you see the market surge like this at opening bell, surge, I recommend you wait. This is the 5-minute time frame. You need to wait 20 to 25 minutes. The surge creates the first hump. Okay? It creates the first hump. And then, because the surge was probably so strong, it's going to create a successful backtest at point number 2. Point number 2 down here. But if it's a head fake, Point number 3 will be higher than point number 1, right? Point number 3 is higher than point number 1. But on the RSI, point number 3 is lower than number 1. That's a head fake. That's why, in this example, you had failure. It was a head fake. Okay? So if we see a big move at opening bell, I would say wait. Wait. Wait for it to go up. Wait for it to backtest. Wait for wait for point number 3 to be higher than point number 1, and then look down at your RSI. Do you have divergence? Or if if on the RSI, point number 3 is equal to or greater than point number 1, oh, you're good. You're good. Go long. Okay? So, I've yet to see a triple head fake. Meaning up, down, up, down, up, and then failure. Now that would be something else. That would be something else. Okay? That is all I got for you guys today. Good luck trading, and I will see you guys again on the evening wrap up for 2022. Okay, talk to you guys again soon.